GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jaybird, joined by my co-host Kyle Reedhead, and we believe that blockchain is going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3.
Will tokens on Bitcoin make the Ethereum ecosystem extinct? That's the question we are answering or discussing today. And it seems to be a pretty big question going on right now on Twitter and making its way through the interwebs, I guess, in the crypto blockchain world. I'm going to anyway share 3 reasons of why I don't believe this to be true, why I think Ethereum will continue to succeed and be the #1 smart contract platform in the space. But I think, though, we're going to get into some techie stuff, not really, and we'll keep it very high level and simple, so don't worry. But I think this is an important episode for those who are either building on blockchain or those who are investing in blockchain to listen to, because it's going to help you understand where the puck is going, not where the puck is, which is the old saying. Was that Wayne Gretzky? I think you said that one. You want to
Wayne Gretzky.
Yeah, skate where the puck's going. And this will help you understand kind of where you should be building, or at least what you should be thinking about. And it also will be important for your bags, as we like to call it as well, right, Jay?
That's right. That's right. And look, it's a bit of a I don't know if scary is the word, but it's a moment in the development of new tech where there's a debate happening or conversation happening about what direction and what the purpose of Bitcoin is, which leads it to perhaps become a competitor of Ethereum. And what does that mean? We all need to understand that in order to be confident in what blockchain we're building on and what blockchains we're investing in. So I'm really excited to dive into this conversation. We're going to give a little bit of a history lesson on Bitcoin. It's going to be a good one. Buckle up, everybody. Before we jump in, though, we'll just take a minute to hear from our lovely, lovely sponsors.
The future of social media is here, and that future lives in Web3 on top of Lens protocol. Web2 social platforms are broken and ripe for disruption. You see, the epicenter of social media is the creators, and yet they are the most neglected. Web2 platforms like Facebook, TikTok, and Instagram are all essentially robbing creators of their worth. Creators are a new type of entrepreneur, forming new types of businesses. Yet with Web2 platforms, creators don't own their content or their profiles, and that's their product and business. Instead, they are tied to the platforms they choose to create on. Well, just like how crypto is freeing us from banks, Web3 is freeing us from these centralized platforms. On Lens protocol, creators own their content, own their profile, and even their social graph and followers in the form of NFTs. This allows you to move freely from one social application to another with your content, profile, and followers moving along with you. Lens protocol enables self-sovereignty for your social graph and interoperability across the internet. At Web3 Academy, we believe this is the future of social, and that's why we've partnered with Lens to ensure that the path of social media is heading in the right direction. Visit lens.xyz to learn more today.
What if I told you that industry pioneers from flagship Web3 brands such as Consensus, Polygon, Binance, Unstoppable Domains, Ledger, and Uniswap will all meet up in one place this summer? You don't want to miss this. I'm talking about the Epic Web3 Conference taking place in beautiful Lisbon on the 9th of June with over 20 curated talks, speed consultations with Web3 experts, networking sessions with investors, and even the opportunity to raise funds. This conference has it all, and you'll get the tools you need to succeed in this industry. Plus, we at Web3 Academy will attend and host a community meetup with you and the other smart community before the main event. So come along, meet us, network, and start building alongside leading Web3 innovators. We can't wait to meet you. Remember, Lisbon, Portugal, 9th of June. We've got a 15% discount for you, but ticket prices go up every few days, so get your tickets today by using the link in the show notes. Enter the promo code Web3Academy15 to secure your spot. Or if you become a pro member, you can get an even bigger discount. So go pro today, and we'll see you in Lisbon, Portugal on the 9th of June at the Epic Web3 Conference.
Welcome back. Okay, so what we've seen the past few weeks, especially on crypto Twitter, is that many people are asking the question, if Bitcoin has tokens and can do what Ethereum can do, if it becomes a smart contract platform, what's the point in Ethereum? Obviously, Ethereum's biggest claim to fame, their purpose is that they are the most decentralized smart contract platform, which is why so many companies have built on top of it. It's why L2s roll up into it. It's why so many apps have built on top of it. It's why all these NFT projects have been built on top of it. But if Bitcoin now offers the same product, i.e. smart contracts, and Bitcoin is more decentralized and has a much larger market cap as of its token, won't it just eat Ethereum's lunch? And I think the question also is, will Bitcoin do this? We're at this moment in time where we don't even know if Bitcoin's going to do this or not, but there is a lot happening that is heading in that direction with Bitcoin ordinals and other things that are being developed. Now, Bitcoiners have called Ethereum the test net for a while, mainly just to slap your younger brother, basically, kind of like a big sibling thing. And now Bitcoin can just copy everything that Ethereum has learned over the last 7 years because this is all open source. So we're at a really interesting point in time. I think before we jump into what will happen if Bitcoin does this and break down the risks.
Meaning if Bitcoin competes, if Bitcoin goes,
if Bitcoin,
okay.
Exactly. Before we break down if this happens, what the effect will be on Ethereum, let's just sort of take a pause and look backwards. Kai, can you give us a little bit of a history lesson on what is the purpose of Bitcoin and what led us here? Why is this happening now where Bitcoin is deciding to go down this path of potentially becoming a smart contract blockchain?
Yeah. So, I mean, there's a lot of history to Bitcoin. It's been around since, I think, 2009, I believe it was. The original purpose of Bitcoin, let's start there, was when the white paper came out from Satoshi Nakamoto, was to just be a peer-to-peer payment network, right? A way to basically remove money from the state and send it to anyone in the world and do it at kind of the speed of light type thing. And it's somewhat moved away from that, but not completely. I mean, it's an open permissionless blockchain. So technically the goal of it can change, right? The goalpost can move and it can be more things. And so what happened is over the years, as it gained adoption, its fees started to go up at certain periods and it didn't really work as a peer-to-peer network. So it's kind of new narrative that came over the last, 5, 6, 7, 8, 9 years has been sort of like digital gold, right? It's a store of value. It's less about a payment network, though there are people who still believe that's it, and they're building the Lightning Network on top of it to try to make it be that as well. But years ago, there was what's called the forking wars or the scalability wars, whatever you want to call it. And basically this was the block size wars, I guess is what it was called, was there was a group of people in the Bitcoin community who wanted to increase the block sizes so that fees wouldn't go high. This is like Binance Smart Chain, for example, has very large block sizes. And so that way it doesn't get congested as much, right? But it's less decentralized. And so there was this big debate. Should we do that so that it can be the peer-to-peer network, or should we keep them as they are, more constrained so it remains more decentralized? What's more important? The winning community from that, Bitcoin did fork, and they have now 2 different ones. Well, they have many different forks, BSV being the other big one. I guess like Litecoin is technically a fork of Bitcoin as well. But the remaining, champion of this is the Bitcoin we know today, which was the store of value. They wanted to keep it as decentralized as possible and have it be just money that is kind of separate from the state. And it's sort of just kind of been that for a while. They haven't done a lot of development to change that or to be something else. And it's done well. I mean, it's I don't know what its market cap is right now, but something like 500, 600 million, something like that. It reached over reached over $1 trillion in the last cycle. So it's been doing exactly what it needs to do. Now, why are we at this position that we're at now? Well, the reason is a bunch of people in the community back in the day, they wanted to build more on top of it. They said, well, this whole permissionless blockchain thing is great for money, but it can also be great for everything, right? And so this is where the kind of idea of smart contracts came from Vitalik Buterin. He actually originally wanted to do this on Bitcoin, but the community basically said, no, they don't want to do this. They weren't going to build in the capabilities for this. They want to keep it to be this decentralized network that can store value. So Vitalik said, okay, this isn't going to work. I'm going to have to build my own blockchain. And that's where the birth of Ethereum came from. And so what happened was all the people that thought, hey, let's use blockchain to do more than just money, to build things like decentralized finance, to build things like NFTs, et cetera, they kind of moved over to the Ethereum world and started developing and building there. Now, there were some people who just loved Bitcoin so much, they said they were never going to leave it and they would only ever build on top of Bitcoin. And so behind the scenes, there's been some developers and some companies, though much smaller than the community that Ethereum built out, that have continued to try to build L2s, layer 2s, to to try to build things like the Lightning Network, like what we're seeing with Stacks, and now what we're seeing with Ordinals. And so just recently, all that stuff has finally came to light, has finally launched, and is now possible. And so out of nowhere, those select few developers who stuck around in this ecosystem finally were able to launch something that now works. And now they have NFTs on Bitcoin layer 1. They have Stacks, which is kind of like a layer 2, which can have what's called BRC20, so tokens, fungible tokens like we know on Ethereum, as well as NFTs. And then they have the Bitcoin Lightning Network, which has been around for a while, and that's just kind of moving Bitcoin to a sort of a faster network. So we've just finally now the technology is available to even sort of compete with Ethereum, even though that's not what most of the Bitcoin community necessarily, I guess, wanted to do or were trying for.
2 more questions just to clarify what you're talking about. When you talk about the Bitcoin community and the people who make these decisions, who are you referring to?
Yeah, it's a good question. So the way this stuff kind of works is, I mean, you have a group of core developers, so those who are working on Bitcoin, the actual blockchain itself and the core technology there. But ultimately, the way that anything passes through, there's voting and stuff that's off-chain, and there's voting that could be on-chain in instances like we have with Ethereum. And there's forums and things that people decide. So there's lots of different ways that people do this. But essentially, the way that anything actually happens is if it's such a debate where people actually just can't decide, and everyone's like, some people are over here in this category and some people are in this category, what you do is you just fork the blockchain itself. You fork the technology, meaning you just duplicate it, and then you make the changes you want. And what happens is those securing the network, those running the nodes, can decide which chain they want to continue to support. And so there's just 2 chains now, and this already exists. There's BSV, which is a fork of Bitcoin. There's Bitcoin itself, right? And some people decided to go here, and some people decided to go here. And the one that was the strongest, where most of the community went, those are the ones that will continue forward. And I mean, they're both technically existing, but no one cares about BSV. Everyone cares about Bitcoin. This happened with Ethereum. There's Ethereum Classic and Ethereum, the one we all know and use today. Same thing. That was a fork. Community couldn't decide. So we just said, let's just fork it and we'll see what everyone does. Most people went to the Ethereum we know today. Some people are still on Ethereum Classic doing who knows what, but they're there. And so it's basically just the overall community, those securing the network, just decide. And if they want to keep running a node somewhere, then they can do it. And we just see where the bulk of the community goes. And the community exists of everyone, users, those running the node, those who are building on top of, et cetera, right?
Because it's decentralized tech, you need all the stakeholders to be involved basically and using it in order to make it become what Ethereum has become, where you have projects building on top and you've got applications built on top. You need everybody, and you need a lot of investors to hold the token, to secure the network. You need the validators, all of this. Okay, so let's assume that Bitcoin, let's go back to our original question. Let's assume that Bitcoin does become a smart contract blockchain. What happens to Ethereum? Does that mean that Ethereum is extinct?
Actually, let's just back up one more second. The reason we're at this point is there are some very there are people who just really are obsessed with Bitcoin and obsessed with this whole store of value and its most decentralized thing. And that's all they want. And so in the community, the developer community we talked about, there are people literally trying to censor transactions that have anything to do with NFTs or other tokens, which is crazy. This is a permissionless blockchain and they're asking for permission to use their blockchain. That is just mind-blowing to me. They're basically missing the forest for the trees, but it is what it is. And so, and look, that's fine. They can have their own opinion. They can have their stance. I have mine, and that's the way it works. That's why I'm more familiar and use Ethereum more than I do Bitcoin. I associate myself more with that kind of idea to build and try different things, et cetera. So is what it is. Either way, something they need to decide. It's catching a lot of attention right now and a lot of use, and a lot of people are using it. People are building on it. It's doing well. So my assumption is it continues, but I'm not sure. We'll see where things go. Yeah.
So let me actually ask one question there. Why, in your mind, why would a validator support one versus the other, support Bitcoin to just stay as digital gold and the store of value versus support it becoming a smart contract blockchain? Is this all tied to the revenue that they make if it is a smart contract blockchain, that there's more revenue involved long-term for them?
So on Bitcoin, it's miners, not validators, but yeah, right. So it depends. It depends what they're doing it for. Some are doing it because they want the revenues, they want the money. They might like the idea of NFTs on there because it's more expensive. It makes fees go higher. They make more. Some are doing it because they, just want to separate money from the state. They believe in the big vision here of digital gold, and they see this as the thing that separates us from inflation and control. And So like they don't care about the revenue side. Though I think most people who are running a miner probably care about the revenues because they have to pay to run a miner. It's actually quite expensive to run a miner. So that's why I think that they will continue this way, because it's just profit and loss. And people, you know what I mean? You got to go where the money goes. That's just how it works. Right. Especially in an open marketplace like this, where there is no like subsidies and regulation and things like that.
Yeah. Okay. So let's assume that enough miners want to go where the money is and enough of the community want to go where the money is. I think that's a pretty safe assumption because that's what's happening right now. That's why we are at this point where we have Bitcoin ordinals and BRC20s that are being developed on Bitcoin. Where does this leave us with Ethereum? Does Ethereum get taken over by Bitcoin as a smart contract platform and Ethereum becomes no more 10 years from now and everyone moves over to Bitcoin?
It would be so ironic if that, it would be hilarious if that happened. I think I'm not glued to any blockchain. I actually don't care. I care about the use cases that come as a result of blockchain. I do think many of those use cases do need to be on something that's fully decentralized, which is why I'm a supporter of Ethereum rather than some other blockchains. But regardless, so I got a couple points of why. We'll start with the main one, in my opinion. So my answer is no. Blockchain or Bitcoin is not going to eat Ethereum's lunch. And I think the reason for that is Ethereum, as much as Bitcoin launched first, Ethereum actually has first mover advantage in the smart contract world, right? So as Bitcoin has first mover advantage in like, let's call it decentralized money, Ethereum has it in the smart contract world, which is where a lot of businesses are building. And so you got to understand that just because something has the ability to mint a token, right, an NFT or an ERC20, or in this case, a BRC20, that's not that big of a deal, right? What really matters is what can you build around those things? What sort of ecosystem grows around that? It's like if you have a country, you have some land, and all you have is a currency, but there's no homes, there's no businesses, there is no city hall, there is no anything. Well, that currency is kind of useless. It doesn't really matter. So the things they're building on Bitcoin right now, all these different tokens and assets, they don't do anything and they can't do anything. Now, not to say they won't. Like you said, they could copy what Ethereum's doing, right? Which is what a lot of blockchains have done. So that's fine. They can do that too. But when I say that Ethereum has first mover advantage, you got to think it's not just in the ability to mint tokens. They have it in the infrastructure that goes around those. Think like wallets, applications, right? But not even that. Think further than that. SDKs, meaning tools for developers to actually come in and start building on top of this stuff. Right now, people don't know how to do that on Bitcoin because it doesn't exist or didn't exist. On Ethereum, if you want to come and launch a wallet, there's already a wallet as a service, right? There is like blank as a service for almost everything on Ethereum. So it's seamless to come in and build whatever application you want on Ethereum, especially like games. You go on Immutable, they've got it all built out for you, right? This is why Unreal Engine has started using Ethereum-based stuff because they have all these tools for developers to make it so easy, right? Bitcoin doesn't have that yet. You also have like Ethereum uses Solidity. That's the language that they write in. Bitcoin uses a different one. Well, Ethereum has 20 times more developers than Bitcoin does at like the core level already, right? That's not even taking into account like all the other devs building on like applications and stuff. And so there's also already training tools and things to help developers learn Solidity at a much higher level than there is in the Bitcoin world, right? So to onboard new community members, new developers is much easier and faster on Ethereum than it is Bitcoin. Now, again, Bitcoin can build all these things, but they are way, way, way behind. Ethereum's had 7 years of this, right? Bitcoin's now at like 3 months. I think it launched in January, right? So like we're talking a massive difference, okay? So I think that's a big thing. Plus you already have the network effects of like businesses, communities, NFT projects, like users, all these things that are familiar with Ethereum. There's stable coins on there already, like all the things that make an ecosystem thrive, they already exist in Ethereum. So it has what we call network effects. In the smart contract world, Bitcoin has network effects as money. It does not have network effects as a smart contract, right? So Web3 is not being built on Bitcoin. It's being built on Ethereum, and it has network effects there. Does not to say Bitcoin can't get that. I mean, Solana came in 2018, 2017, whatever it was, and they now have network effects. It can do it, but it's not eating Ethereum's lunch by any means. Not right now.
I might be jumping a little bit ahead, but just because you brought up Solana, is there room for there to be multiple smart contract blockchains?
Oh yeah, for sure. I mean, yeah, that's the other thing is there is no eating someone's lunch. There's tons of lunch. There is just a buffet and you can go and eat whatever you want. Now, I guess at the moment there isn't. There's not that much need for well, I guess there is. I mean, Ethereum and Bitcoin blockchains are extremely expensive, which means there's a lot of demand for block space, right? So there's plenty of demand for that. And we know that. And so I think we're not taking pieces of someone's pie. The size of Web3 is not the size it's going to be for forever, right? This industry is going to 100x in the next 10 years, right? And so there's plenty of room for both Bitcoin, Ethereum, and Solana and everything else to all grow the whole thing together. Now, I'm sure powers of law, one will be the biggest and will get a large portion of it. Who that will be is yet to be seen, but they all can grow significantly in the coming, decade.
So obviously Ethereum has a big first mover advantage, as you stated. I think we all understand and see that because we've experienced that over the last 7 years. What's the second reason why?
The one other thing I would say is that also Ethereum was built for smart contracts. Bitcoin was not. They're building, like, some are saying that the way that they're building these LTs are actually better than L1s. And we had a pro report that did go through this. So, like, again, I'm not saying that the way that Bitcoin's doing it's wrong. It's just that Ethereum was built for these things. So it's more seamless, more frictionless, and just it's easier in terms of the technology itself, even regardless of community, et cetera. Now, again, Bitcoin can change that. They could fix it. They can build tools around it. And so we'll see where that goes. But a technological standpoint, it's also just easier to do this on Ethereum than it is on Bitcoin. On the other side of things, we got to think of like sustainability, right? And so sustainability in terms of the security and the tokenomic structure of it, right? It's tokens that, the token BTC does not secure Bitcoin like Ethereum does. The ETH token technically does because it's proof of stake. So it is the token itself that is like enabling that security. But the miners on Bitcoin do get paid in BTC. So technically the token really, really matters. Now, one of the things that Ethereum has done a really good job of is being open and seeing like, where's the space going? What do we need to change? And they have been just consistently changing and improving upon the Ethereum blockchain and the token, right? That's what we've seen with proof of stake, with the merge. We've seen it with EIP 1559, with all these different things trying to upgrade the network. Bitcoin has remained kind of like, they've done some upgrades, but it's very slow and has kind of stayed as is. Now, Bitcoin's claim to fame is that it has 21 million Bitcoins. That's all it'll ever have. It inflates right now, but that's just inflating up until it reaches that 21 million. By 2100, it'll all be mined. And the only way that miners will make revenues, so those securing the network, is through fees. So Bitcoin needs fees. They need higher fees to be able to afford their security in the future. Right now they're fine, but in the future, okay? Now Ethereum recognized this and they said, okay, well, we're not going to cap it. We're not going to stop at 21 million. We're going to let it go to whatever it wants, but we're going to find other ways to make the tokenomic structure work, okay? And so if you think about the sustainability of these two economies, and I like to think of them as economies, right? We're talking about people building on top of them, businesses, et cetera. The problem I find with Bitcoin right now and why I don't hold a whole lot of Bitcoin is because the Bitcoin network leaks value from its economy. It leaks value to other economies like the United States and wherever else that people are running their miners. And the reason I say this is the way that their security system works is miners buy equipment and then they pay for electricity to run that miner. They secure the network, and as they do that, they get paid in BTC. But they have expenses, quite high expenses, in fact, to run this electricity of these miners and to buy the equipment. And I'm talking like in the millions of dollars of expenses. And so they have to sell BTC into US dollars or into Euro dollars or whatever it is, wherever they are, and go and buy that equipment in the real physical world. And they have to pay for electricity in the real physical world, which means that the value of Bitcoin is actually just being sold by those that are securing the network. So it's leaking value. Now, Ethereum used to do that when it had proof of work, but it switched to proof of stake. Why? Because to run a validator is what they're calling Ethereum to secure the network. You don't need a miner. You can use your laptop, the same thing that we are using right now to record on this podcast, which means that I don't have any additional expenses. I already have a laptop and I already pay my electricity. It doesn't go up. Like it goes up maybe a few dollars, kind of like it's irrelevant, right? So there are no additional fees. And so I don't have to sell the ETH that I'm earning, right? I can just leave it in the ecosystem. I could sell it to buy a stable coin or to buy an NFT or to do whatever, or I could just leave it and accumulate it and let it keep coming, right? And so it doesn't leak any value. It all remains, at least most of it remains in the economy. And to me, that is a more sound, kind of efficient economy. And its business model, we think of these again, they are businesses, just like every country is technically a business. It's more sound. The business model is more sound. It's more sustainable right now. Bitcoin could change that. It could make changes to their tokenomic structure. They seem to be very stuck on what they have. And so I actually think that the Ethereum network and the way that they are looking to secure it and the way that they are looking to have the design for their token is actually much better. And that's my opinion. There are other people that will disagree with that, and that's fine. I actually don't care. I could care less. I own some Bitcoin. I own a lot more ETH, and that's one of the main reasons why.
One point that you're bringing up quite a bit is the purpose of these blockchains impacts the thousands of developers, miners, validators that are part of the community. And in order to make change in a decentralized community, in a decentralized organization, you need a lot of people to jump on board with that. Now, Ethereum has been doing that for years, which has developed this mindset amongst their community that that's what we do, right? We're constantly evolving. We're constantly listening to what the market needs. And we've got this long roadmap of change. So change is part of their DNA in a way, right? Whereas Bitcoin's kind of the opposite. Change is not part of their DNA. That dynamic, I think, will make Bitcoin slower to change if they do.
And Ethereum's vision has always been to be the settlement layer of the internet, right?
Yeah.
And that's not what Bitcoin's is. Bitcoin's is to be the settlement layer for money, whereas the internet is a different thing, right? So, and again, though, Bitcoin could change. People will change their minds. And so maybe it happens. Let's see. I mean, the thing is, Bitcoiners have been watching what's going on Ethereum for the last however many years going, holy shit, these guys are actually building something cool here. Well, maybe some of them are like, it's all shit. It's all shit coins, they call it. So I think that they pivot, but who knows? Who knows?
Well, I think the other point that you brought up is that somewhere around the year 2100, Bitcoin will be fully mined.
Yeah.
And at that point, there is going to be a fee structure issue for the miners.
And think about it. If your goal is to be a store of value, they're basically telling people not to exchange,
not to trade,
don't transact, right? Where do the fees come from, right? And if the solution is, well, we'll all exchange and transact on the Lightning Network, well, then there's no fees on the Bitcoin network still. So like, where do their revenues come from? That's what people don't understand. And again, I know it's 100 years away or whatever, but I don't know, shit matters. Do you want to build a business on a platform that's going to be around for not 100 years, 10,000 years, right? So these are important things as a builder. And of course, as an investor, like I hold a lot of ETH because I plan to give that to my kids at some point. And I hope that they give it to theirs and so on and so forth, right?
You might not know the answer to this question, but let's say Bitcoin stays as it is right now. After all of the Bitcoins have been mined in whatever, 100 years, whatever, we don't know exactly what year that will be, but when that happens, how would the miners pay? I guess they don't need to mine anymore. So like, what would happen if they didn't change? Would they just be doing it out of the goodness of their hearts to secure?
So there are some fees that they would make from the fees on Bitcoin, right? Like it does cost to send a transaction on Bitcoin, but it's a few dollars, right? Sometimes less. So they would make that. And what that means is people are going to take those mining rigs, shut them down because they can't afford to pay the electricity of them, or they're not going to buy the next, they have to buy them every few years because they go bad. They're just not going to buy the next one because they can't afford it, right? Also, why would they? If you can just put it into ETH and then just put it on your laptop and validate that way and make 5%, right, per year and have the same appreciation, if not more, or what it's been anyway, what would be the point, right? There wouldn't be the point. And so now if there's way, way, way less miners, then if there's like 10 miners left, they could make a lot of money mining Bitcoin. But that means there's basically no security. So what will happen is a bunch of people will leave because they can't afford it, right? And then at some point it reaches an equilibrium where people are making money, but how low is the hash rate at that point? How low is the security at that point, right? Is it now just very easy to hack? So it's a problem.
Very interesting.
And there's no way people will do it out of the goodness of their heart. That's not going to happen.
Right. No, of course not. No. That might be another conversation, is diving deeper into what happens in 100 years to Bitcoin if Bitcoin doesn't change.
Well, the thing is at some point, people are going to wake up and they'll find a solution, right? Just like Ethereum. When Ethereum launched, they didn't know they were going to do the IP 1559 and blah, blah, blah. They just knew, like, let's just do it and we'll figure it out. I think Bitcoiners have the same idea, right? They're just slower to do it.
Okay. Let's get to third point about how Ethereum is safe, even if Bitcoin does become a smart contract platform.
Yeah. So the other big thing is, I mean, ever since Ethereum launched, basically no one has launched proof of work since that, right? Everyone has done proof of stake, not only because it's easier, it's cheaper, whatever, and it makes more sense in terms of tokenomic structure because you don't leak value, it's also much better for the environment. And I know a lot of Bitcoiners are going to get all upset saying, Bitcoin's not bad for the environment, blah, 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 blah. The fact is that Ethereum now uses 99.9% less energy than Bitcoin does. Now, does Bitcoin use the most energy in the world? Absolutely not. Do banks use more than Bitcoin? Absolutely, right? Do many industries use as much energy as Bitcoin does? Sure, right? But the facts are that there are many companies in the world right now who have mandates, especially in Europe, but this is all around the world, and every country is going this way, that they can only use a certain amount of energy. And so they just don't and can't use Bitcoin regardless. They just can't. And they couldn't use Ethereum before it merged as well. And so now they can. And Bitcoin has no plans to move from proof of work to proof of stake. Now, again, I am not in the camp that says that Bitcoin's the worst thing in the world and it's, going to ruin the environment, blah, 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 blah. There is a lot of Bitcoin miners that are using renewable energy. And also it's pushing innovation to create more types of renewable energy in different ways. So and that's their big fight, which I agree with. 100% is doing amazing things for the renewable energy space. But the fact is, it still uses a hell of a lot of energy right now. It's not fully renewable. As much as it's innovating, it's still not there. And so in this moment, right now, there are many, many, many companies around the world that just will not use Bitcoin, regardless of how good its tokenomic structure is, regardless of how good its smart contracts are, or anything else. They don't care. They just can't use it. And they will not use it, right? So Ethereum, Solana, all these other ones that proof of stake, they already have that advantage right there because just a lot of people can't use it until Bitcoin decides to move to proof of stake, which I think if it ever does that, its coin goes to zero. Because why? Because it's better for them, but their community has just fought for that so long that I think everyone gets to that point. If they got to that point, then there are no holders, long-term, the strong diamond handers. They must have quit if they let it go from proof of work to proof of stake because they have been fighting that fight for way too long.
Okay, so when we break down these 3 points, right, that Ethereum has this massive first mover advantage and a large network effect that is happening right now that has created 20 times the developers in their ecosystem. If Ethereum has a better tokenomic structure, and they also are better for the environment. Coming out of this conversation, I'm more bullish on Bitcoin now, and I'm actually more bullish on Ethereum. I'm actually more worried about Bitcoin now and what happens there, even though their market cap is at 500 billion and Ethereum's market cap is at 200 billion. Yes, Bitcoin seems to only win because they have the biggest brand name and they are the most well-used crypto. And the simplest, yes.
The simplest, right? Digital gold is so easy for people to get. They've been around for much. They have the first mover advantage for money. So it makes sense. They have the biggest market cap, right? But for smart contracts, they do not, right? They're not even close. I had the same realization as you. When I really dove into Ethereum back in 2020, I started moving all my Bitcoin over to Ethereum.
Bitcoin will figure it out. It's not going anywhere. And I still have Bitcoin and I feel confident in it. I do worry about the fact that they seem like a community that is allergic to change. It's very focused on being this one thing, which I'm down with them being one thing. I actually think it's great.
Which is a feature. Yeah, it's a feature, not a bug, right? They've done that really well at that.
That's great. But if there's this problem that's going to come up 100 years from now that's kind of lurking in the background, that's a little bit worrying, right? And also, I think, like you said, the energy thing, it cannot be brushed aside. 99.9% less energy is a huge difference, especially when we're in a world where climate change is one of our biggest issues as humanity.
To kind of back up Bitcoin a little bit, and I don't hear a lot of people talk about this, but my opinion is in 100 years from now, energy is going to cost nothing, right? Probably the equipment to run a miner to secure Bitcoin will go down significantly, right? Technology is always deflationary, especially manufacturing machines like that always get so much cheaper as you hit economies of scale. So probably the expenses to secure the blockchain go down significantly by 100 years, right? The world will be a very different place 100 years from now. So I do think they will figure that out. So I'm not necessarily bearish on Bitcoin. I'm only bearish on the ETH/Bitcoin chart. I think that ETH does better than Bitcoin in terms of its token price, also in terms of its Web3 economy. And I think that does better. But I do think Bitcoin lasts, and I think it figures it out.
The other thing is when we talk about the monetary revolution versus the internet revolution. And I think that's a core concept to understand in Web3 that you brought up earlier, that Bitcoin initially was focused on the monetary revolution and Ethereum is focused on the internet revolution. And there is a difference between those two. Is I feel like Ethereum is solving the monetary revolution as well because of stable coins. And stable coins, I was talking to somebody today on a call about doing a business deal, and they joked, they were like, I'm not going to pay you in Bitcoin. And I was like, obviously you're not going to pay me in Bitcoin. Why the fuck would you pay me in Bitcoin? They're like, I'll pay you in like USDT. And I was like, yeah, if you paid me in Bitcoin, I wouldn't want it. I might lose 10% the day you pay me.
Capital gains on it.
Yeah.
Well, okay, so Ethereum is fixing the monetary revolution not because of stablecoin. Well, okay, right now it is doing it because of stablecoins because we still live in a very fiat-dominated world, right? So it's a technological innovation on fiat, but I think ETH is fixing the monetary, because the monetary revolution is not having, less fees or faster movement of fiat currency. It's getting completely out of the fiat world, which is what Bitcoin is solving, right? But what I thought you were going to say is ETH is also solving that. Right? Because ETH is also a currency that is outside of the state. It is also money. And in my opinion, it's better money because it is ultrasound money. It is scarce. It is deflationary, whereas Bitcoin is just neither. I mean, it's currently inflationary, but doesn't really matter. So like you said, there is the monetary revolution, there's the internet revolution. The one thing I think people need to understand, this is what we touched on at the beginning, is think about how big these two industries are. Every single person in the world uses money. Every single 5.15 billion people currently in the world use the internet. This is the biggest industries in the entire world that blockchain is looking to basically revamp, right? So is there room for multiple blockchains? Absolutely. Now, is there room for multiple currencies around the world? There's not room for millions of currencies or stores of value necessarily, but there's room for a few, for sure. We already have hundreds of currencies. So like, definitely. But I think to get the whole internet and the whole money system on top of blockchains, you might want more than one. Just saying, you might need more than one.
The thought that just popped in my head, which was a completely side thought, was just, if I was a business and I was building right now, obviously you have to consider which blockchain you're going to build on top of. And that's the other conversation that we could have as that sort of ties into this conversation, is where should you be building? And I think it's quite obvious to me right now is that you should be building on the biggest network. If you build on top of the biggest network, you're going to get the biggest network effects, and you're going to get a lot of support as a result of that, because you're involved in something where there's so many people, so much action.
Yeah, and it depends on your audience. Let's say you're an artist. For mega contrarians, they're like those that are like really against the state, and they want their freedoms and blah, blah, blah. Like maybe making a NFT, some art on a Bitcoin ordinal is not a bad idea, because those are the people that hold Bitcoin, right? If you're a tech nerd and you want to reach the Silicon Valley type people and those who like want the, safe data and privacy and all that, like the Ethereum people are probably your crowd. Now, and then if you want to just go completely mainstream, well then neither Bitcoin or Ethereum are it. You need layer 2s on Ethereum or Solana. That's basically the markets for you.
Yeah. If you're a corporation, a large corporation like an NFL or an NBA or a Ticketmaster, you probably go build on Flow, because it's more of a centralized exchange.
Agree.
More security and a little bit more control there. So yeah, it's interesting. Okay.
There are a lot of people who could not have this conversation where we just said you could go and build on any of these blockchains. There are people cringing right now. They're like, no, it has to be Ethereum. It has to be Bitcoin. They're like, you said Flow. Who are you?
It's so interesting in the advancement of technology to be a maxi to one technology. It feels like anti-technology advancement to me. Like
because there's money involved, right?
It's because there's money, and 100%. It's because there's money. To be honest, it feels like it's human ego and competition too. I feel like it's sports teams sometimes. I'm like, you walk into a bar and you feel like you're like, oh shit, I walked into the Bitcoin bar. Like, I better not tell anybody I'm here. It's like to cover your jersey, like, I don't know how you would show that that's who you're cheering for, but yeah, it feels like that, right?
Right. Yeah, no, completely. That's funny. Ego is a good point. And then just obviously money. People go crazy with money. So that's just the way it works. But that was great, Jay. Any other thoughts? Any other questions? Or should we wrap it up here?
So let's wrap it up. We could probably continue talking for hours, but let's put a wrap on it. Any final thoughts on your end?
No, but we didn't ask a poll question. So if you've made it this long, then there is a poll question underneath and we want you to answer it. So please just scroll down there and you'll see the question and let us know the answer. I'm not going to tell you the question because I want you to actually scroll down and go find it, but it's a good one.
Tuesday, if you are a pro member in our Discord, we are having a meetup where we're breaking down the top 5 charts that you should be looking at if you're investing in blockchain and Web3. So make sure you go pro if you're not already go pro and join that meetup. Excited to see everybody there. That's been a really fun thing that we've been doing every month. This week, we've got a couple of great podcasts coming out. Wednesday, we're interviewing one of the founders from Paragraph, talking about the future of newsletters on chain. And then Friday, we'll have the roll up. We'll be back with the weekly roll up. Have a great week, everybody. Thanks so much for listening in.
Thank you for listening to Web3 Academy. We hope this helps you along your Web3 journey. And if it does, please share this episode and subscribe so you don't miss the next one. Nothing in this podcast was financial advice. Crypto and Web3 can be risky. You can literally lose it all. In fact, if you invest on account of what we say, you probably will lose it all. So don't do that. In all honesty, the point of this podcast is to remove the noise of markets and price and focus on utility and implementation anyway. So you should not take any of this as financial advice. Thank you, friends, and see you in the next one.